Welcome back to another day trading video, and this is part 2 of my personal indicators. So this is low-key gonna be a very quick and fast video, since I'm just gonna teach you all 3 of my indicators that I use. So let's go over them one by one. So first, we're gonna go into this. We're gonna hide this one, the session indicator, and let's go over this. So right now you can see on the bottom volume indicators. All right, so this is a 5-minute time frame. You can see within this big red candle, you can see how many volumes of shares were traded. You can see right here on the side, if you point to it, 44,000 shares were bought during that candle or specific time. So in that 5-minute, 44,000. Now if you go to the 1 minute, we can find this like a random big candle. You can see this green candle right here, 3.18,000 shares were traded. We go to this candle, 2.9 shares. You can see on the bottom the level of shares. So you can see a big amount of shares were traded on this candle. You see, let's see how much. Good. If we don't have to hover, we don't exactly have to be exactly on it, the pointer. We can just go like this with lining it up. You can see 6,000. So you can see there was a lot of buying. So if I were to bought within this candle, yeah, it would have gone up because of a lot of buying power. But you can see a lot of selling power coming up too, and yeah, we would have got stopped out. So that's the danger of trading. So you got to be careful. You can see a lot of selling going on right here, also with a lot of buying. You see very volatile, moving up a lot. So you want to be careful within this area, but this is why we have confirmation tools. So if we just put our tools, so you can see this is a breakup structure right here, a high, and then a higher high. This is a downtrend, so broke structure. We put our equilibrium. This is gonna be our order block right there. You see, yeah, so you can see within these candles it did not reach it, so boom, it reached, then it went all the way up. So yeah, you could have bought right here, then you would have got stopped out. So want to be very careful. That's why you also want to look for maybe a fair value gap as well. You can see, actually, I think we do see a fair value right there. This fair value gap got inverse. That is a inverse fair value, a bearish fair value gap, so bullish inverse. So yeah, but you still would have got stopped out because it just went down completely. But you can see it went back up. But this is just a terrible example because I don't know what happened here. I actually got caught up on this. I actually took a trade and got stopped out because of this candle, but it's whatever. You got to be okay with the red days. You got to be okay with the losses. You got to be okay with the struggles. But we're not talking about that. This is just a volume indicator. You can, I could have tell like, hey, there was a lot of selling, so maybe this is not a good opportunity to buy. But I did see some buying. So you see the green bars was higher. But enough about volume. You already know about that. So let's look into the session indicators. Now you can see that previous day, you can see that age of highs. That price went into age of highs, and what happened after is sold off. I could have used that as a moment to buy because it reached. I marked it out, and boom, right there, it reached age of highs, and boom, it went down. So very useful. We can show another example. Age of highs again. It kind of reached age of highs, blew above it, but then it quickly went down because it reached age of highs. We can see. Other example, like another age of high right here. What happened? Reached age of highs and then sold off. See, very good examples that can be shown here. And yeah, so that's the session high. So you want to mark out the London. I don't really mark out the New York session highs, to be honest. I just mark out the London highs and the London lows, and the Asia highs and the Asia lows, and wait for one of those prices to be tapped. So, and the London and the New York high, the London overlaps the New York high, so they're kind of the same, but it doesn't, but yeah, not the lows though. But I don't really care about the New York lows or whatever. But it's good to mark it out actually. So if you see right here, low, and then boom, went all the way up high. So yeah, that's if you want. I really don't. I might start doing that actually. But now we go on to the volume profile. you can see that this is a volume profile. So over this specific time, so from here to all the way here, a lot of volume was going on to this going on in this area. So for the next day, when it's over here, what am I expecting? A lot of volume to be happening. What happened? A lot of volume did happen. Now you can do this by tapping the second, third, fourth, fifth box right here. It is the forecasting and measurement tool. Go right here and you can see volume base, fixed range volume profile. Or you can go into the indicator and tap it. So let's go right here. Let's erase this. You see over this time from image is measuring from here to our latest, a lot of volume. POC means a point of control, so a lot of control volume was going on to this price, the $25,014 mark, around this area, around this price. And so if price were ever to go down to this area, and its price is most likely going to be attracted to this area, then yeah, it go down to here and then may start selling off or may start buying. So a good opportunity to look for, hey, if I sold right here, this is a good opportunity to start to sell, to buy back my shares so I can get in profit. Or if it comes down, I will buy right here and sell up here if I'm expecting up. So that's my volume indicators. Yeah, that's it. Thanks so much for watching, guys. If you liked the video, please like, comment, subscribe. And like I said, it was a short video, so yeah, make sure you share with all your friends, and I'll see you guys in the next video. Peace.